If we hop over now to Coke, symbol is, of course, KO. This is so interesting to me because we saw in the XLP a very similar move off of this trough, almost same time or similar at least. A move right up to 78.6, then it started stalling out. Let me show you that in this right here. Right? Look at that. Look the exact same. Move right up to the high. This is where I have said previously, right? And you guys can, do your own work and gain confidence in what I'm saying based on your own research. As soon as you get right up to the high or very close to looking at a prior high, if it's a bullish cycle, which this was, higher cycle high, higher cycle low, as soon as you get up there, the odds change. That's why uh, it's so important to really go after these early stage rising modes because those are the most probable. As soon as you hit prior swing highs after a positive cycle, the odds shift. And that's why we always have to think about EV appropriately. EV is expected value. You always have to be thinking about that and how that changes as certain areas get touched. And now, to that end, let's pop over to Coke. Look at this, okay? Draw on your fibs. This held on a closing basis, except for that one bar right there. Basically, the 78.6, right? This is within a few cents below. Doesn't, really matter. Fine. Now, as soon as you curl up, look at that little base. I want you to see this. This is how you can, identify the opportunity. Look at the base that was forming. That, keep in mind, this is a weekly base. The longer your time frame, the more meaningful these are. So this is a weekly time frame in which you're seeing the base. That's really interesting. Again, working off that downtrend. Look at the RS on the weekly, telling you that it's getting worked off. Look at the curl back to the upside. Okay. And now you then broke out of the base and you obviously got the move. Now this bar was on earnings, so we'll have to see how much of that was earnings, but it doesn't matter. This is the same thing, right? This is the curl, this is the base. This can help you with phasing to understand. And then this is your opportunity set. Once you hit the high, almost to the tick, you can see that within a few pennies, and you got into that zone here from 72.88 to 76.22, again, drawn from this key cycle low, that fib high to that low. That's where these fibs came from, right? Once those two things are hit, and then you see it start to fail versus that, you should be thinking, wait a second. We hit our minimum target. The odds are starting to shift. And you can see what's happening. We're now starting to fail and giving a roll here on the downside and likely due to form a dip possibly into that 66.90 to 65 area. We'll have to see, but very interesting pattern and super important to emphasize to always think about EVs on your trades once certain areas get hit, right? And if we pop over to the short term, look at this bullish right-hand translation. Same exact concept. What's the minimum target for that? Pull back into the rising ribbon. That's your base case downside target. That got hit right here. Side the drawing is kind of hard to see. That got hit right there. Your base case upside target, if you are looking to play that bullish right-hand translation, would be the old high. What happened? It traded to the high, no close above the old swing high, and instead left the tail. And look at what's happening to the RS on the daily as that's happening. It's starting to curl. So it's saying that there is a shift in bias happening here on the RS on the weekly. Interesting. Now let's overlay on the daily. I keep saying weekly. On the daily, a shift in bias on the RS on the daily. Shift over to the cycle analysis to help us to put some context around what we're looking at in terms of just the indicators. Okay, so now we had a trough, a high that formed here, and we're now losing that low. So where am I starting to think I'm going to be now watching for a short side opportunity here for a swing going into that trough, 417 to 52. what am I going to be waiting for? I want to start seeing closes below this old low at 69.45 and for the slim ribbon to turn neutral and then to not go positive again. So if I start seeing price action down here, I'm going to and see again multiple days below. That is increasing the odds that you're in a left-hand translation. I'm never in a hurry to get short in a left-hand translation too early. I want to see price prove to me that this is in fact a left-hand translation and not a late low, right? So I would know that by seeing price hold down, and for the EMAs to start curling their way to the downside and for the RS on the daily to be holding red, right? You can just visualize that happening. Then I will be looking to the short side for move down, as I said, into this zone here, 66 to 65. 66.92, I should say, to 65.43. So this is a very interesting one. Certainly worth keeping on your radar here to the short side, in my opinion. Okay, so that's a look at Coke and a detailed breakdown.